That was the highest since 2005. Strip out the all-important food and energy, it's up 0.3, exactly as expected. And that
exactly
up 0.3, how does it compare? High water mark in this series was April of 2021. It was up 0.9. That was the highest level since 1981.
Exactly
Let's go to the year-over-year consumer price index. Expected up 6.5. Exactly up 6.5.
All right, so inflation
high water
came
mark
in
June
exactly
of this year,
as expected.
9.1. This is now the 6th consecutive lower month, and the high water mark goes back to 1981. Finally, in my opinion, the most important metric, CPI year over year, ex food and energy, known as the core, expected up 5.7. All four of them exactly as expected, up 5.7. And high water mark September of this year at 6.6. This marks the 3rd consecutive month that this metric is lower. And as you look at what's going on here, interest rates, well, they moved a bit lower. Now they're kind of hovering a bit. But the fact of the matter is that for whatever reason, the equity markets are going lower. Interest rates have moved off of their best levels. And I think that the reason is that we're still looking at numbers that are a bit sticky. And I think expectations is something we, the insiders, pay a lot of attention to. But in the final analysis, I think the issue is that many would have liked to have seen it maybe a smidge lower. Let this thing simmer. I think, in my opinion, is you get a lot of cross currents based on what positions investors had going in, what they're trying to put on now. But ultimately, I'm not sure if stocks are going to be that much lower as the Dow futures indicate. And do remember, stocks were trading at the new highs of the week before this number, and interest rates were trading at new lows for the week before this number. I think that about covers it, Joe. Back to you and the panel.
Yeah, we've had a couple of numbers that were so positive in terms of maybe allaying some fears, Rick, I guess, cooler than expected. I think people were hoping for a continuation of that trend, and we had already ratcheted down expectations, and they hit those expectations. They just didn't surprise us with even being cooler than expected, and who knows where the market ends up today. But the initial reaction was, wow, I wish we had gotten an even cooler than expected number, and that obviously isn't what happened.
Exactly. I think you nailed it there, Joe.
Yeah,
and what's more, ultimately, this now becomes an issue where the markets have already taken much of the slack out of the rope in both directions in terms of interest rates bucking guidance by the Fed, the equity markets, of course, and the entire notion of easing financial conditions that really is going to bump up against much of the Fed guidance, which, listen, they're not going to change. They're not going to change till it's so apparently obvious that the high water mark is in the rearview mirror, and it's not that inflation stops going up or even that inflation goes sideways. I think we're now at the point where many would like to see more negative signs like that headline number.
And Rick, the commodity, the tailwind of maybe some commodities coming down. China's reopening, so who knows if we can count on that too. Thanks, Rick. Let's get to our panel for some instant reaction. Mona Mahajan, Senior Investment Strategist at Edward Jones. Dana Peterson's Chief Economist.
For those of you just joining, inflation comes in exactly as expected. It dropped 0.1% month over month. Came in at 6.5% year over year, exactly as expected. Market right now is reacting kind of flat, a little bit down, kind of flat, but we're going to see a bump up and down all day. Remember that the market rallied insanely before this. So, maybe the market was hoping that we come in cooler than expected inflation. But right now the market is kind of flat. So anyone that's in any strangles, and I have a strangle on the SPY as well, this is not what you want to see, right? And traders don't want to see this. You want to see volatility. Let's see what they have to say.
Good number has been priced into markets already, but keep in mind, expectations have come down. So the 6.5% year over year figure we got was down from an earlier expectation of 7%. The 5.7% on the core side is also a lower number. So we are moving in the right direction. And when we see leading indicators of inflation, including the ISMs, including the supply chain pressure indices, even things like break-even inflation and consumer expectations of inflation, all are moving lower. So our hope is that the trend does continue in this direction. And in fact, we see core inflation heading towards the 3% levels by year end of 2023. So continued good trends.
Yeah, and we've seen a reversion back to where things were in stocks and bonds. The Dow's back up, Dana. So is this another data point? Can we discern anything from the trend? Is it going our way if you're hoping that inflation cools?
Yes, this is a good trend, and certainly what's important will be what's in the guts of the report, whether or not it's in those areas that are demand-driven, such as rents and also services. But certainly this is in a positive direction, and we think the Fed's going to look at this favorably, but it's probably not going to cause them to not raise rates. We do think that they're going to hike at least 2 more times, 25 basis points each.
Michael, what's most important as far as components? We worry about labor, but we saw that in the last employment report. Santoli's here too. So I'm talking to Michael Strain at this point. So, wow, that's an 8 box. That's get one more row. We'd have one more row and we'd have 12 and really get some decent analysis here. But
that's
Michael
right. We
Strain,
could all talk.
Michael Strain, is China going to be? I mean, won't commodities? Couldn't we have seen the coolest numbers from commodities if China totally reopens, and then we're back to, maybe labor becomes a tailwind at that point.
By the way, remember that the market is not even open yet, right? So we're looking at futures here. The market opens actually in a little under an hour. So
I think overall headline inflation is clearly heading in the right direction. We saw another month where goods inflation, core goods inflation, decelerated, but we didn't see a further deceleration in core services inflation. And
no, I was talking to those people on Instagram Live when it said sound not working. And I was letting CNBC play. But I'm going to let this play for a little bit, and then I'm going to react to it.
From 4.5% down to 2%. I think going from 8, 9 down to 4.5 is what we're seeing. That should be relatively straightforward. The hard part will be getting wage inflation down, which will allow the Fed to kind of get the final mile done by returning price inflation to the target. These numbers don't indicate to me that's happening. I think we're not seeing an acceleration in core services inflation, but we're not really seeing a deceleration there either. That's what we need to start seeing.
Kind of interesting movement in the dollar. I just saw, Mike, in the stock market. I don't know. Who knows what happens? You watched that. It was a kind of a quick knee-jerk reaction. But now the 2-year yield is below where it was prior to the number.
Yeah, absolutely. I mean, obviously, you need to let it settle out. But we did come into this number with the premise being inflation is decelerating. There's some downside momentum. We've been saying in recent days the burden of proof is shifting toward those who believe it's going to be sticky at a higher level. And the market is kind of trying to move beyond that. It's the shelter, the rent areas that seem like they are the sticky parts. That's the part the market's gaining some confidence is actually going to give way down the road. All that being said, not sure about the direct Fed implications of a 1/4 point or a 1/2 point hike in February. Not sure it matters very much. The market is saying Fed's just about done. They're going to let the higher for longer idea do the work from this point on. And, expectations are lower. Earnings expectations seem reasonable. And inflation expectations have come into line. So I think the market in general is okay with this. It's now all about, are we going to see the lagged effects on economic growth, which right now, it's just not giving way that quickly. And I think that's good news for the economy. Whether you think that that's sort of bad news for the Fed, I'm not convinced we can make that leap just yet.
Oh, you haven't talked to Leisman yet. I think we're adding if we can't do 12, I just don't think with 8 we can. Okay, we got to 10. We got a 10 box. We got a 10 box. So we've just.
All right, I'm going to shut this guy up for a second. But for those of you that just joined, so in terms of the CPI comes in exactly as expected. CPI came in at 6.5% year over year. That's what was expected. 0.1% down month over month. I think this is the 6th month in a row that inflation is trending down. I'm not sure it's obvious to a lot of Americans that inflation is trending down, but by the way that they judge the metrics, inflation is trending down. However, trending down but coming in exactly as expected is a rather flat scenario. Right now, futures are really flat. If you're looking at the S&P, they're bouncing back and forth between flat and a little negative, flat, and a little positive, depending on which of the indices that you're looking at. But yeah, I mean, it's, inflation is trending down. And so the expectation in the short term is that, hey, maybe a soft landing is possible, right? Especially as we got the the unemployment data last Friday showing that that unemployment, actually, the unemployment number actually went down, which is not what the Fed wants to see. But we had the slowest jobs growth and slowest wage growth in 2 years, right? So the expectation or the hope is that the Fed is coming close to stopping. But here's the thing. Raising rates is not the entire picture, right? It's how long do they keep them high? And so the next Fed meeting is going to be February 1st, and they will likely the expectations that they will do a 25 basis point rate hike. I don't think that they stop. I think the market is hoping that they come in and say, hey, we've paused on rates. But I don't think they're going to pause. I think they're going. I think we're so close to 5% on the Fed funds rate that they're going to take the Fed funds rate to 5 and then probably keep it there for a while until inflation is below 5, right? But I do think that before the end of the year, the Fed will actually start to taper, right? They will slow, and then they might even cut rates by the end of the year. I know that seems crazy, but I, based on how the Fed acts, I do think that they might do that. So I just wanted to give a shout out to Edelman. Edelman1 donated $50 to St. Jude's. As you guys know, every single one of our live streams is a St. Jude's fundraiser. So appreciate each and every one of you for donating, and thank you, Edelman, for donating $50. Huang says, shit, that means no move, right? Fuck my straddles. Straddles are a really expensive way of playing this. You're much better off with a strangle. A straddle is a very, very expensive way of trying to play this. You can go out of the money strangle and achieve the same percentage with a much smaller amount of money, which is what I did. I have a strangle most of the year most of last year that's been kind to me on binary events. But yeah, I mean, you don't expect them to play out. I mean, even me, I only have one strangle. Like I'm not playing a ton. I'd much rather day trade throughout the day when the market opens than buy a shitload of strangles and hope that they work out, right? So Jad Shuker says time to buy. Time to buy what? Stocks? I mean, yeah, in my view, I've been tweeting about this and I'm saying, what if you're not buying here, right? The NASDAQ is even a better example. So let's look at the NASDAQ real quick. But we matched the lows basically that we saw in October on the NASDAQ, right? And I said, if you're not buying here, then what are you waiting for, right? It's a fair question. And I posted this on Twitter. If you're not buying here, what are you waiting for? There has to be a point at which it meets your criteria. And some people did answer with some pretty sensible answers. Some people said, oh, I'm waiting for the VIX to get up. I'm waiting for the Fed to actually start cutting rates. I'm waiting for this and that. And some people just had no clue. If you're in that I have no clue camp, then I suggest that you quickly get a clue, because we are at basically unprecedented territories. I've shown bear markets in the past. Bear markets of more than 30% down are not very common. I think we've only had 13 bear markets in the over 100-year history of the stock market. We've only had 13 bear markets that have gone over 30%, and over 50%. I think there's only been 3. So it's not very common to get bear markets like this. So I pose the question again, and it's a very valid and fair question. If you are not willing to buy here, what are you waiting for? And I'm not saying what are you waiting for as in go all in. I'm really asking. It's not rhetorical. I'm really asking, what are you waiting for? So for me, you know, if you have a long-term horizon, how often, go back and look at the NASDAQ, how often are you going to get the NASDAQ at down 35%, right? I don't think that you're going to get that very often, and I think the market will be at all-time highs before people start buying again. So, yeah. Let's see. Manu, what's going on? What's going on? Danny, what's going on? Trent, everyone out there in Instagram as well. Geosis, what's going on? Victor, Marshall, love you guys. What's going on? Robert Wilson, rather bearish though. The news today is not bearish. If you're talking about just specifically today, no, it's not bearish. It comes in exactly in line. Which is not very common, but no, I wouldn't call that bearish. I would actually call that bullish, really. And by bullish, I don't mean that the market is, ready to take off forever, but it's a 6 month in a row that inflation has gone down, right? You know what's crazy? I'm also seeing a lot of negativity about the market in the form of, one, really criticizing people who are choosing to buy some stuff now, right? And two, doom and gloom scenarios where it's the end of the world. And both of those to me are pretty unreasonable, because check this out. How could anyone laugh at anyone for buying here, right? When people, you take Tesla or Apple or even the indices, people are buying near the all-time highs like it's going out of style, right? Like nothing bad's going to happen. But then the minute that the market starts tanking and we're down 30%, people get made fun of for buying. Like, oh, you're so stupid. You don't know that it's going to get worse. Well, guess what? They probably got a much better price than you're ever going to get if you're one of those that's making fun of people for buying here, right? I think that we are close to hitting levels on some stocks that are buyable for sure. I did buying back in October, and I said that I'm not going to do buying again until we match the lows or hit newer lows, because I already bought at this low. Being down 30% for me was enough for me to start dollar cost averaging. Especially with a potential upcoming recession, I think keeping cash is prudent, some cash. But if you do have investable cash, again, I pose a question, and I'm being serious, not rhetorical. What are you waiting for if you're not investing now? And if you have a good answer to that, if you're like, I only invest when the VIX is above 30, or I'm only going to start investing when the Fed cuts rates, fine. That's valid, right? But if you don't know and you're just pointing to the market saying that it's doom and gloom, well, probably not a great way to address things, right? All right. So right now, NASDAQ futures are again flat, down 0.1%. S&P futures are down, they're up by 0.08%. Very, very, very flat. I do think once the market opens, you're going to get a lot of volatility, right? There's going to be traders that are trying to pin this as good news, and they'll be running the market up. You're going to get traders that are like, no, this is actually not good news. And, they will maintain a bearish stance. And it's going to be a fight between bears and bulls, just as it is now. But right now we're dealing with lower volume than what we will see in about 40 minutes. 1 second, please. But yeah, and for those of you, again, on Instagram Live, I'm live on YouTube. So click the link in the bio. I'm live on YouTube. All right, cool. Let me see if you guys have any other questions. I'm trying to post a comment. I don't think I can post a comment on my own video. But one other thing I wanted to remind you of is that you guys loved when I did the free mastermind webinar last time. You guys were asking me to do it again. Everybody that joined, I gave you guys a discount for joining the academy. So we're doing that again. I'm going to post this link in the chat, but I was trying to post it as a comment. For some reason, I can't. I might do it after the video. So if you're watching this afterwards, check the pinned comment and you will see this link as well. But if you click on that, I know it says December 17th, but it's going to be January 28th at 12 p.m. Eastern time. That's a free mastermind with me. We go over, topics ranging from technical analysis to futures trading to options trading. So if you're not already part of the academy, it's a great way to get a glimpse as to what we do in there. But make sure if you want to join that, because there's only I think 500 seats and then it maxes out. So make sure you click that link that I just posted in the chat. I am going to post it if you're watching this after in the comment section. So you will see it as a pinned comment, but just a reminder. All right, let me get back to your questions. And by the way, that's January 28th at 12 p.m. Eastern time. All right. You guys see gold and silver the past 15 minutes, huge volatility. Is it? Let's check it out. Let's go to the gold chart. Yeah, gold is, I'm looking at GLD, and GLD pre-market looks like it's up, wow, 1.1%. That's a big move for gold. And silver is up. Silver is up as well. So this is very interesting, because gold and silver are so far, and silver is up 2.6%. Silver and gold are reacting as if the CPI came in worse than expected, right? I wonder how bonds are reacting. Let's see what the 10-year treasury looks like. Currently, the 10-year treasury is down 1.6%. And what about the 2-year treasury? Oops. Let's check on the 2-year. So bonds are being priced as if, 1 second, 2-year. Where is the 2-year treasury? Let me just look at the futures. So the 2-year treasury note futures are up 0.13%. That means that the yields are down as well. So bonds are being priced as if the rates are dropping. So bonds are being priced favorably, as if the economy is doing better, inflation's doing better, and the Fed is not going to be hiking on February 1st. Gold and silver are being priced as if the inflation report came in much worse than expected, and stocks are flat. So go figure, right? Right now, I mean, again, you're dealing pre-market, so it's, you're dealing with low volatility. Let's wait until the market opens in a little over half an hour. Yes, it says December 17th, frozen. I just said this. It says December 17th. We will be changing the link, but it's January 28th, okay? And for those of you guys on Instagram, if you click the link, go to YouTube and watch me live, you will see a link. I'm doing a free mastermind, a free trading mastermind. We go over topics like futures trading, options trading, technical analysis. They're usually extremely lit. Not usually, always extremely lit. But this one, we're opening it up to the public, so we will have hundreds of people in there. Make sure to grab your spot if you want one. Roman, appreciate you, man. Thank you so much for donating $20 to St. Jude's. Regine, what's going on? Danny Casillas, do you always use the iron butterfly for the day trade on the S&P? No. What makes you think that? No, I don't. On the S&P, when I'm day trading, it's usually I'm day trading futures, right? It's the ES futures. It's this right here. Yeah. So if we take a look at the S&P 500, actually, we're coming up on a major level here. So we're coming up on a major trend line that we failed, right? This is called a swing failure pattern back on December 13th. December 13th, I believe that was, remember when we had that day where it was FOMC and CPI back to back? That was December 13th and 14th, I believe. So December 13th was one of those days, and we swing failure patterned. I don't know if that's really a verb. Above the trend line and then broke below it, right? So we're coming up on that trend line right now. This is literally a moment of truth as it relates to technicals. And you know what's crazy is we have tomorrow. This is not the end of the week, so we have tomorrow to see what happens with the next candle. But it could be, we'll see what happens when the market opens, right? How this is interpreted. I would not be surprised to see us shoot above this, and then potentially see a rejection, right? I think right now it is crazy to me what the bond market is doing. Again, the bond market is pricing in that somehow the Fed is not going to raise rates. That seems crazy to me. Yeah. Wow, oil is up as well. Crazy. Sonar, what's going on? All right, today is pump day. Yeah, it could be very well. Why is the FB on that chart? I'm not sure what you mean, Javier. The FB? Not sure what you mean. We need to close above the last high to be bullish. Yeah, but we will close above the last high most likely. The last high was 3992 on the S&P futures. We're currently at 4009. Obviously, yeah, we could get rejected and close below. You're right. Also, this red box here, if you take a look at the 4 hours, this red box here is a major, what we call a fair value gap, right? This is on the when you see this stuff on the higher time frames, it usually has more validity, and on the daily, it's around that same level as well. So this is definitely a moment of truth for the stock market. What it's going to do, I have no clue, but I would not be surprised to really see us fail this, right? Break above, fail it, and then on February 1st. Which, remember, February 1st is the next FOMC meeting, drop back below when the market realizes that the Fed is not going to pause, right? Because I think that the Fed is going to raise rates. Actually, this is a good opportunity to look at the Fed Watch tool. 1 second. Let's look at the Fed Watch tool real quick. The Fed Watch tool is going to tell us what the market is expecting in terms of interest rate hikes. Here's the Fed Watch tool. All right, so the Fed Watch tool right now, wow, it even went up. Now it's expecting that the Fed is going to do 25 basis points. That's what I think. I actually have a bet with people in the Discord. A few days ago, I said that if the Fed doesn't do 25 basis points, meaning if they do 0 or if they do more than 25, I'm going to pick someone at random and buy them a new trading monitor. I will buy you a nice, huge, fat trading monitor, external monitor that you can use for your trading, right? That's the bet that I have going on right now with the people in the academy, that if the Fed doesn't do 25, so if they do nothing or go over 25, I'm going to pick somebody at random and buy them a new trading monitor, because I actually think that they will do 25. And right now the market, based on the last CPI report, is pricing that in as well. Let me get to your guys' questions. Do you guys have any questions? Oh, yes. Hit that like. P says, hit that like button. Hit that like button. Let other people find this. Tin Nguyen, have a good day, Z. Blessings to you. Blessings to you, Tin. Thank you so much. Indices beginning to trend higher. Yeah, I mean, we're going to see this all day. What is the dollar doing? Very good point. Let's look at what the dollar's doing. But I bet you the dollar's trending down. Yeah, you can see now the dollar is down almost a full percent today, and it's completely breaking down, by the way. The dollar is down right now around 11% in the since September. The dollar's down, right? Which is helping stocks. But the dollar, I think this is where it goes back to, around that. Right now, the dollar's right where it was during the crash, the COVID crash, right? But pre-COVID crash, it was just below 100, or pre-COVID, it was just below 100. And I think that's where the dollar is going back to, for sure. Back to its place around the $100 mark. But still, we do need rates to remember we were operating in a zero interest rate environment for a very long time. Everybody on Instagram Live, what's going on, guys? How you guys doing? I'm live on YouTube. Make sure you click that link in the bio of Instagram to join us live on YouTube. All right. Do you plan on closing out a leg of your strangle? Market hasn't opened, man. I don't know. I mean, here's what happens. Here's what happens, right? In a strangle. Here are the hypothetical scenarios and how you play it, okay? So for those of you that don't know, let's just backtrack a little bit. A strangle is when you buy a call and a put at the same time, right? You're buying a call and a put at the same time because you're expecting the market to move big in either direction. You just don't know how to pick that, okay? But you need a big move to happen in a strangle in order for you to make money. So if the strangle, if the S&P 500, if you have a strangle in the S&P 500 and the S&P 500 does not move, then you actually start losing money on that strangle, okay? But let's take a look at how a strangle is priced. I'm going to show you how a strangle is priced. I'll actually show you my strangle. One second. Let me switch the screens real quick. All right. So if you look at this is how a strangle looks. You buy a call and you buy a put, right? So this is the put side. This is the call side here. And you are hoping that the market moves big in either direction. And I want you guys to actually, you know what? I'm going to do this. Mouse. So I want you guys to look at this right here. Okay. This right here is going to be your profit and loss depending on, this is for the SPY, right? So this is going to be your profit and loss depending on what the SPY does. So if the SPY starts moving in this direction, so let's say right now the SPY closed out, or right now the SPY is trading at about 398 pre-market. If the SPY goes to 370, let's just say that's a big drop, right? We'll be up $3,000 on that. If the SPY goes up to, let's say, 420, we'll be up around $3,100 on that. These are big moves, right? But you start losing money if the SPY actually does less than the expected move. Well, how do you find what the expected move is? If you take a look here, you could see in Thinkorswim that the expected move is printed on every single expiration date. This right here, this plus minus, is the expected move for that expiration date. So you'll see on January 13th, expected move is plus minus 7.7. January 17th, it's 9.3, right? And then the expected move for the day is up here in yellow in triple M. This is called the market maker move. So we're expecting 4.6. So if the SPY doesn't move, the expected move, in this case, I have the January 13th strangle, right? So if the SPY doesn't move by at least 7.7 in either direction, then I start losing money on this, okay? Now, in a strangle, if we do get a huge move in one direction, you're much better off closing the side that's up. Why is that? Because let's say right now the market is green, right? So if we get a huge move in this direction, you're much better off closing the side that is up and leaving the side that is down, because you're going to lock in the gains, let's say on those calls, right? And for those of you on IG Live, I'm on YouTube. So click the link in the bio, join us on YouTube Live. We're covering the CPI data. and trading live. So if you want to lock in the gains on those calls, because those puts are now going to be worthless, right? So if we made a move in this direction and you're in a strangle or a straddle, your calls are now up, right? They're likely up, I don't know, 100% or whatever. Your puts are down to almost 0%. So you're much better off closing your calls, locking in those profits, because your puts are worthless. You have nothing to lose by keeping them open. And then seeing if throughout the day, which is very typical on FOMC days, very typical on CPI days, where you might get a huge reversal in the other direction, you're much better off holding those puts to see if you get more value out of them and then closing those as well. So rarely will I ever close out the whole strangle if we make a big move. The only time I close out the strangle is if we're trading kind of in this ugly neutral range and the strangle is not up or down, and I don't expect, it's not up or down significantly, and I don't expect the market to make a big move that day. Like right now, the CPI came in line, right? Exactly as expected for both month over month and year over year. So in that case, if I'm not expecting the market to make a 1-2% move, and my strangle is not losing a ton of money, I might close out the entire thing and salvage the value, which is looking like what I'm about to do, depending on the market right now, right? It right now it looks like the strangle will be down a couple bucks, maybe up a couple bucks, and I might just close the entire thing at market open, because to me the play is dead based on what we saw in the CPI, right? But if you are expecting a big move in either direction throughout the market day, then yeah, you want to keep it open, right? And I don't trade a ton of them. Like I'd much rather day trade than try to hold these things overnight and pray that something big happens. So hopefully that answers your question. For those of you that have strangles and straddles, please slash the Discord price 50%. You know what? It used to be, and I grandfathered everybody in, and I gave everybody a chance to stay grandfathered in, and those people are still grandfathered in if they remain with us. But in order to provide value, I mean, it's a ton of value, right? We're doing regular mastermind calls, daily trade alerts, stock analysis. You get access to the courses, the options course, the day trading course. It's way too much value. It's something that I wish I had when I first started trading, over a decade ago. So, Avir, I just told you how to play the strangle. Is your put spread still valid? What put spread? Apple? No, that put spread is down. That put spread is definitely down. It expires in over a month, but yeah. How many inches is your monitor right now? 21. It's not that big. All right. I'm going to close Instagram Live. Again, for those of you remaining on Instagram, we're on YouTube. Join us. Link is in the bio. Peace. All right. Do you plan on closing out your strangle? I just answered that. Sir, 1 million account for management. Trader Sam, what does that mean? You want me to manage your $1 million account? No, man. I wouldn't do that. I would have to know you very personally for me to even consider something like that. Thanks for, and even then, it's most likely a waste of my time. Let's be honest. Thanks for making these streams. Appreciate it. Thank you, Noor. Good to see you in here. Indices beginning to trend higher. Yes. You have 5x value of any Discord out there. Appreciate you, Laura. Thank you so much. Thank you, Laura E, for saying that. Yeah, I really think we do as well. There's just so much value, and it's just a one-time membership fee, and then you get access to everything forever, including the mastermind calls, which I think is one of the most valuable things that we do that other people don't, because we get to bounce ideas off of each other. You get to ask any question you want in trading. You get instant feedback. Again, it's something that I wish I had. When are you bringing back the braids? I mean, right now, my hair is crazy. So probably, maybe very soon. Maybe very soon. Because yes, it's getting wild. What if already bought the options course prior to mastermind? Can we get grandfathered in? No, the options course does not include the rest of the Discord. Trader Sam, I'm serious. Trader Sam, I'm serious too. Stop trying to give me $1 million. No, I don't want your $1 million. Okay. If you have $1 million and you don't know what to do with it, go buy the S&P 500. Please will you send me the recording of the last Zoom mastermind? Well, the recording of the last Zoom mastermind is actually in the mastermind channel in the Discord, right? So we have the mastermind recordings and they're all in here. But no, I can't send it to you unless you're part of the academy. You have access to it forever, but no, I can't send it to you. Mastermind calls are fire. Appreciate you, Derek. Donated to charity. There you go. Hello. Appreciate your help and videos. How early is the detection of bookmap? How early is the detection of bookmap? I don't know what that means. I don't use bookmap for one, but I don't know what you mean. How early is the detection? Do you still feel like we can see October lows from here? We did on the NASDAQ. And again, this is why I posed that question on Twitter that, some people answered seriously and some people thought that it was ridiculous. But I was saying, if you're not going to buy here, what is it going to take for you to buy? Because I really want you guys to be able to answer that question for yourselves. I'm not saying buy, and I'm not saying go all in, and I'm not saying don't. But I said, if you're not buying the NASDAQ here, just curious, what would it take for you to buy, right? I want people to start thinking like this, because I think what happens, I know what happens is that people hold out, because they listen to so much bad news, but they don't have a plan for when they're going to start buying. So what happens is the market starts inching higher and they're like, no, it's going to go back down. I don't want to put my money here. Fuck, I could have bought it at the low. Is it going to drop from here? The market goes higher. Same thinking. Market goes higher. Same thinking. And then when it's finally so high that they can't take it, they start buying. This happens to 99% of the people. I've been in the market for 2 decades. I've seen this time and time again. It's even happened to me before, right? So I know how it feels to be on that end versus being so comfortable buying here. The only reason, in my view, unless you had a plan, like some of these people who responded to me, were saying, I'm going to wait until the Fed cuts rates, or I'm going to wait until the VIX goes up, or whatever, fine. But most people don't have a plan, and they're just waiting, and they don't know why they're waiting either, right? They're waiting for maybe good news. They're waiting for someone to tell them to buy. But, buying at these levels should make you comfortable. It shouldn't make you squirm. Buying at these levels should make you shit your pants, because we've ran up so high, you don't know what's going to happen. But buying at these levels shouldn't even make you squirm. With that said, to answer your question, do I think we're going to hit October lows? We already did on the NASDAQ. You have your chance there. On the S&P 500, yeah, I do think it's possible. But here's what I'm saying. The difference between here and the October lows on the S&P 500 is about 10%, right? What is the upside? On the S&P 500, the upside is double that. Okay. Now, I think we're very, very long. We're a very long ways away from hitting all-time highs again. Okay. But I don't think we're that far off from the lows. On the S&P 500, I do think that we are eventually going to hit the pre-COVID highs. But that is very close, by the way, to where we hit in October on this wick here, right? Here's this wick. Here's the pre-COVID highs. And we have 15 minutes until market open. right? So we hit very close to pre-COVID highs. So if you were waiting for this right here, I mean, as we say in trading, don't be a dick for a tick, right? So if you were waiting for just this little bit here and you didn't buy because of that, then you really have some rearranging to do of your strategy. I'm a big fan of buying in the crashes, right? The other thing that you hear people say is, oh, what if this is a lost decade? If you take a look at the .com crash, it took X amount of years before we hit highs again. Yes, this is true. If you go from peak to peak, this is 2000, this is 2007. Yes, if you go from peak to peak, it took 7 years to hit all-time highs again. And I think we're very close to being in a situation like that potentially. And I'll tell you why in a second. However, if you bought the crash, right, you were in a party. You were having a party for fucking 5 years. But if you were the type to buy near all-time highs, and then you're like, oh, everyone's saying this is a lost decade. I'm scared. I'm this. And you didn't buy again until near the all-time highs. Yeah, it took 7 years. If you bought the crash, it took you less than a couple of years to be insanely profitable. And I think that, nobody can tell you how long the Fed is going to keep rates up, right? But if the Fed keeps rates up for a very long time, then I think the market does have more crashing to do. If the Fed keeps rates up just until halfway through the year, pauses, and then maybe end of the year cuts, then I think that towards the end of the year, you will see a bottom to this market, right? The job market is really hot. The economy is growing at an insane clip. This is not all recessions are created equal. So this could be a very short recession, and inflation is trending down for the 6th month in a row. So, I do think that, here's why I think this could be a lost decade scenario. Again, I just showed you how after the .com crash, it took us 7 years to get back to all-time highs. The reason that I think that is because remember when we were up here, yes, the big stocks like Apple, Microsoft, ExxonMobil, all the Dow Jones stocks, all the top of the S&P 500 and NASDAQ stocks, those were all up, right? But remember that we had meme stocks, we had SPACs, we had IPOs. You take a look at any single stock that was hot back then, right? Like QuantumScape was at 130. Take a look at a stock like Bed Bath & Beyond, right? Bed Bath & Beyond was trading at $50-something, currently trading at $4. Really take your pick, right? Lucid was trading at $65, trading currently at $7. Even Tesla was trading at $400, currently trading in the 120s or a little below. So that is why I think that it's going to be a while before we get back to these all-time highs. And I don't think that those meme stocks are going to be the ones that take us to those all-time highs. It's when the valuations of the big dogs start getting, start going up again. And we're operating in a low interest rate environment. So I do think it will take us a long time to get back here. But again, as I stated at the outset, getting a crash of over 30% has only happened 13 times in the 100 some odd year history of the stock market, right? Hopefully that makes sense. How long until CPI? We already went over it. 6.5 month over month, down 0.1 as expected. Hi, I did not get grandfathered in, although I was a member. Everybody has the same story. I'm not saying that that's not true. It could be true, but we've gotten hundreds of people that have wanted to come in saying they were grandfathered and they weren't. I'm not going to be looking at people's accounts today. I'm not going to act as your customer service rep today. Email subscriptions@thetravelingtrader.com. And if that's true, they will take a look and verify. But I'm not going to be your customer service rep today, okay? Just wondering, Lucid a meme stock? Yes, of course it's a meme stock. Coinbase, accumulation year for me. Yeah, Ola, I think it will be. And if you're young and you have a bit of money, this is a great time to start dollar cost averaging. Trust me that before you know it, the market will start ramping up again, and people will be like, "Oh fuck, I missed Tesla at 100. I missed this. I missed Apple at 100. I missed Microsoft at whatever it is, 220, 230. Microsoft is actually a stock that I'm increasingly becoming more excited about. I do own a lot of Microsoft, but especially with their investment in OpenAI, I think they invested another 10 bill. I think that's going to be a game changer. What's in for first-time subscribers? What's in? I don't know what you mean. First-time subscribers to the channel. If this is your first time here, click on this link. We're doing a free webinar on January 28th where we will go over topics such as futures trading, options trading, etc. And in that, you will have a coupon code that you can use for a day or two after the webinar only. The webinar will be recorded for members. As always, those webinars are always in here. You can refer to them at any time, going over any of the concepts that we discuss. But we will not be sending out the recordings, to non-members. Microsoft is overpriced. I mean, okay, that's fine. But I'm saying Microsoft has a great future investing in AI, right? It's overpriced, but it was also trading at 350 and it's currently 235. So I'm not saying buy it now, but yeah, 10 billion on ChatGPT. Yes. What is your thoughts on TSMC? Noor, you've been here long enough. No thoughts, questions. Ask a more specific question. Please be more specific. What about Chinese stocks? What about them? Ask a specific question, please. Bunch of investors, please. Your team should reach out to me. Trader Sam, shut the fuck up. Stop trying to take people's money. You know what? Actually, I'm going to ban you. Beware of Trader Sam and his scams, please. I have to upgrade my laptop as it's a Microsoft Surface 2 and slow. Do you recommend upgrading to a newer laptop or a PC? I don't know, Sheikh Rahman. I don't know, bro. I don't live with you. Maybe it would be fun for like a week, but I don't live with you. So I don't know how mobile you are, how many times you visit the coffee shop. How much you travel. Obviously, if you do that a lot, get a freaking laptop. That's what I have. This is actually a laptop. I have a MacBook Pro M2 Max or M1 Max or some shit like that. Whatever the highest M chip is. But yeah, if you just stay at home, then get a PC. How would I answer this for you? Hold those triangles, volatility around Fed talk today. Bryce, what do you mean by Fed talk? I know Biden is going to be talking about half an hour, but what do you mean Fed talk? All right. Tell not Alan to call me back. Alan, where you at, bro? Okay, I'm gonna text him. I'm gonna tell him. The stepdad. What is your? I don't know. What is your? Can you just email subscriptions at thetravelingtrader.com and give your name? I can't tell who you are by the stepdad 9800. Okay. Dopa, watching from Philippines. I was in Philippines last March. I went to Coron. I went to El Nido. I went to Manila. Philippines was awesome. Awesome. You do have to be brave to try some of the food, though. I will say this. No offense. You have to be a little brave. to try like the red egg or balut. That's wow. You need to be brave to try some of that. Shall we look into shorting TLT since junk bonds are paying more to institutions? TLT has more to do with expectations on future rate hikes. Junk bonds will always pay more. I don't get that thesis. The reason they're called junk bonds is because they offer a higher rate at much higher risk. Stepdad, dude, stop. Just stop. Just email subscriptions@thetravelingtrader.com, dude. Like, I'm not gonna go over your account and shit right now. Like, I can't do that. Palawan, yeah, Palawan was dope. El Nido's in Palawan, right? And I went to Coron, and Coron City as well. Are you David Blaine's brother? Yes. We have the same mom and dad. Me and David Blaine are brothers. He does magic. I do magic in the markets. So yeah. You didn't grandfather me in. I brought value to the Discord. I'm about to ban you, dude. You're getting so annoying. I'm about to ban you, honestly. Where will be crypto in June? All right, market's about to open in 4 minutes, so I have no time for shenanigan questions right now. We will get into shenanigan questions in a bit. Wow, Bitcoin is up almost 8% this week, huh? Crazy. I think crypto. I really haven't been keeping up with it as much, but crypto is definitely a risk on asset that has only gone up during a time of low interest rates, right? So during a high interest rate environment, risk on assets are not the wave. And I do think that once interest rates are cut, I think Bitcoin will surge. I don't know about the rest of crypto because it's all a joke to me. But Bitcoin for sure, I think will definitely surge the minute that interest rates are cut. Have you been traveling lately? Yes, I was just at the World Cup. Visual Dreamers. I was at the World Cup in Qatar. I went to the UAE. And then before that, yeah, I went to Milan for the F1. I was in Sardinia for a month. Yeah, 2022 definitely traveled quite a bit. I'm a big family fan. What is that? What does that mean, Robert? Not sure what that means. Z, can you grandmother me in? Everyone's got jokes today. Halving is next year as well, Z. Yes, that's a good point, Gunmetal. I don't like that you changed your name to G Metal. Gunmetal was way better, but yeah, so that's true too. Bitcoin halving is next year. And if that coincides with cutting of rates, I do think Bitcoin has another bull run for sure. After watching multiple channels, TT is the real deal. Thank you for sharing. I appreciate you, Richard. Thank you so much. Opinion on Tesla. Expected price at the end of 2023. It depends on rates. If rates are cut, I think Tesla will be over 200. If rates pause or are cut, I think Tesla will be over 200 by end of 2023. If rates stay high, I think Tesla gets murdered in a high interest rate environment. This is what Tesla fanboys didn't understand. You have a lot of people posing as experts online who are Tesla fanboys who did not understand that interest rates are a death to Tesla, right? Not only the fact that Elon was acting erratic and it looked like his head was in Twitter as opposed to in Tesla, but high interest rates affects houses first and then cars second, right? And then growth stocks, all of their future earnings and how they are priced in the future are discounted by a much higher interest rate. So not only is it a car stock, it's a hyper growth stock. So stocks like Tesla absolutely get murdered in high interest rate environments for sure. All right, what is the market doing right now? Let's see. Up 0.2. 0.26% on the S&P, up 0.29% on the Nasdaq, up 0.28% on the Dow Jones. So yeah. All right. Jonas Pond, game on. 1 minute to open. Market is on. Tesla may reach $60. I mean, it could, I guess. Yeah, it could get to. I think the reason people talk about 60 is because pre-COVID high was 65. Yeah, it could certainly reach there. I personally don't. I wouldn't bet wholeheartedly on it. I would start dollar cost averaging on Tesla way before that. Let's take a look at what the market is doing.
Less content, more family content. Do you buy or sell Hulu? Because this balance sheet's so bad, I don't know the optionality here.
Sorry, I can't listen to Craig. Yeah, market is flat. So if you are in a strangle, you are probably better off holding it, waiting to see what the market does by the end of. Wow, sorry. Okay, so the strangle that I'm in is currently down about 50%. So you can either salvage it here, or you can wait to see if the market makes a big move by the end of the day, right? The crazy thing is the market was making big moves. The market was making big moves before today, right? Like the market went up. Let's see. The market went up about 5% before today. So, you know, I think that there was a lot of volatility that took place before today, but I do think based on how today's candle looks, right? This, what do you call this? Dragonfly doji. It's almost at zero, right? Almost unchanged. I do think that, which is horrible for strangles, obviously, but I do think we will see a big move up or down before the end of the day. I don't think it's going to stay flat. One second. Where is the? All right. I know this might sound silly, but what happens if interest rates go to 10%? Yeah, it sounds silly. So let's just leave it at that. If Elon gets someone to run Twitter, that will give him time to focus on Tesla. Yes, I think that was the hope, is that Elon will get a CEO by the time that 2023 started, right? Have you seen the XLE XLK ratio? No, ask me, Axie, or tell me more about it. Is this a no-brainer medium-term sell at resistance? I don't think, if you deem anything in the market, no, I'm not going to say that. If you deem most things in the market a no-brainer, then probably shouldn't be in the market, because very few things in the market are a no-brainer. No, this is not a no-brainer. And why would you sell here? We're near the bottom. If you were going to sell, you know, you would have done it way, way long ago. Right now, selling right now, you're just capitulating. If you're holding things from, you know, from all-time highs until now, you might as well just, I don't know, do what you want, but I don't see how selling here, you know, how this is such a smart and novel move. Bullard talks at 11. I expect volatility around then. Hold your strangle. You know what? That's actually a very good point, Bryce. That's a very good point. Yeah, I think so too. All right. Why the Dixie showing weakness while the Fed still raising rates? What do you mean? Look at the 10-year Treasury. The 10-year Treasury is down 1.1%. So rates are down. the Fed didn't announce that they were raising rates. The reason that the treasuries are down and the reason that the Dixie's down is because the expectation is that the Fed now can pause, right? But they're not going to pause on February 1st. Like, as I said, I do have a bet with the Discord saying if the Fed doesn't do a 25 basis point rate hike, I will buy somebody a brand new trading monitor. All right. Let's see. Taking profit on BBAI. Okay. Those bastards killed all the premiums. No, they didn't kill all the premiums. You decided to trade. You don't have to trade. We can't blame stuff on people, right? Like, you decided to trade, Jacob. Take accountability for what you decided to do. Nobody did anything. You could have not traded and just waited and tried to day trade today, right? But you wanted to trade a binary event. So this comes with the territory. Yeah, it sucks. The strangles, are down, like 50, 60%, but you decided to trade a very risky, a very risky day, right? So, yeah. And by the way, like, when it comes to stuff like this, I would not, and I do not put, I think that the problem that people get into is that they bet a lot of their portfolio on days like this. And that's just not the way. Like, I would much rather I trust myself enough to day trade this. And that's where most of my money will go. But, trying to guess on earnings or FOMC or whatever and betting a large amount of money, for me, that's just not the way that I trade. Got Tesla puts at the open, short Tesla. Let's take a look at Tesla. Let's look at the chart. Oh, good job. Shit. Yeah, I wonder why Tesla is tanking today, considering that yields are down. But the whole market is down, right? The S&P right now is down 0.23%. NASDAQ is down 0.45%. And the Dow Jones is down 0.18%. All right. Well, I have 90% of my 401(b) guaranteed 3.5% fund. I'm 62. Would you DCA into riskier funds if you were me? I'm not going to answer that question, Steve, with all due respect. I don't. I'm not a financial advisor. I don't, and actually, a lot of financial advisors suck as well. But I'm not going to give you any advice. Like, don't take advice from anybody on YouTube or anybody that really, I wouldn't take advice from anybody except for your own instinct, to be honest here. Unless there's a finance manager that you really trust. But I would not feel comfortable you being 62, so close to retirement, and you're asking if you should be in riskier funds. Okay, I'll tell you this. If you have to ask, Steve, if you have to ask, then you shouldn't do what you're thinking of doing, okay? Because those people that are confident with being risk on, like, I'm confident day trading, even though it's a very risk on strategy. I don't have to ask anybody whether I should be day trading. I'm confident in my own skills. If I wasn't confident, that's when I would ask, right? So if you have to ask, then I would stay away from doing whatever it is that you want to do. My uncle swung BBBY calls. I told him it was stupid. It wasn't stupid. if you took a look here, I actually posted this on Twitter. And by the way, if you guys are on this and are not following me on Twitter or Instagram, I post daily finance and trading content, including trade ideas. I post them all the time. But this is what I posted on Twitter regarding short squeezes, including BBBY. I said, where is it? Let me try and find it for you. Okay, here's what I posted. And by the way, follow me on Twitter. I give you guys trade ideas all the time. Whoops. I said I posted this when? I posted this on January 2nd. I'm normally not a short interest watcher because most stocks with high short interest never see a short squeeze. But some big names barely moved last week, some even positive, and that's when the market was down, right? And I had posted this and posted all their short interests. It was Carvana, Bed Bath & Beyond, Mara. Mara had an insane couple of days, and so did Bed Bath & Beyond, right? So not crazy, honestly, if you wanted to throw, and even I said might throw some lotto calls here and there. Not crazy based on the stats. Certainly nothing to full port in, but yeah. What you think about Microsoft buy point at 195? Yes, I mean, it was trading at 350, of course. In my dad's day, your job would invest for you. Different days for our seniors. Danny, I mean, I remember a time when, this is when I was still in college, but you had to call your broker to execute a trade. And it was like $100 a trade or something. And I remember when I was in college, E-Trade came out, and they came out with $9 a trade. And everyone went fucking insane. Like, oh my God, $9 a trade. This is going to change the game, right? And E-Trade was what Robinhood now for young people, E-Trade was for young people back then, right? That was the first internet trading company that went mainstream, and it was $9 a trade. So it's not that long ago, talking about in your dad's day, but I'm probably old enough to be your dad. I really like that Twitter overview. Yes. Again, follow me on Twitter. Tesla's still overvalued. Yeah, Unfiltered report. Tesla is overvalued, but again, Tesla was overvalued when it was 400. So there's a disconnect between something being overvalued and you being able to make money on it. Okay, the market right now. So let's take a look at the S&P 500. It's down 0.4%. This is the intraday chart. Here's the daily chart. Yeah, it looks like we're being heavily rejected. See, this is what's so amazing about the market. And obviously, things can happen later in the day, but two things are amazing about the market. One, how much the market can trap buyers in, right? Like the last 4 days, all I've been getting is, why is the market going up? Why is the market going up? There's a difference, guys, between trends and cycles, right? This is the trend. Look at this. This is the trend right here, right? This is called a cycle. So within a trend, a market will cycle up and down like crazy, but the trend is a straight line. The trend is a straight line. So, I think people get enamored with a few days or a few weeks of green, but they're not looking at the entire trend. So I think this move right here captured a lot of liquidity, and it looks like right now we're being rejected here because the market opened and it wanted everybody to think, oh, we came in as expected. That's amazing. Let's pump the market. Trapped a lot of buyers. If we take a look intraday, I'll show you. What the fuck is going on here? Wait a minute. If we take a look intraday, the market is really just a series of grabbing liquidity. I've talked about this before in my Instagram reels, but if you take a look at the market on any given day, yeah, it's not this crazy, but it's just a process of grabbing liquidity, right? And when you see these tall wicks here, these are institutions getting everybody's stop limits. Same thing up here, getting everybody's stop limits. And what they're trying to do is grab liquidity at the top, write it down, make money, take liquidity at the bottom, write it up, make money, take liquidity at the top, write it down, and now you're going to see another liquidity grab here, right? And usually, I mean, this was a lot of liquidity, so it's not always guaranteed that you're going to get these big wicks. But what happens is that people have their stop limits, below support levels, and the market just comes in and takes out their stop limits because they know that they're hiding there. So again, I don't think that we're going to get, it is possible that we get a liquidity grab below this, but we already took so much liquidity here that it's possible we don't. So, let's see. But the market is really just, every single day is just a series of grabbing liquidity. And I think the last few days, if you take a look at the market, this was all grabbing liquidity. And then we hit this trend line. And now we are seeing some resistance. And that's the other, what I was saying, what's amazing about the market is how sharp technical analysis is, right? And it's crazy to me how many people online, how many, supposedly expert YouTubers or expert investors who don't know how to trade talk about traders not being able to time the market. No, you can time the market. You can't time the market when it comes to long-term investing. But on a day-to-day basis, yeah, you can time the market. And even for swing trading, you can time the market. If you guys remember, and that doesn't mean that you can time the market with 100% certainty, right? But if you guys remember, we were in early November when I was waiting for this level here, and I said this would be my next short. And we were just sitting there waiting for the market to get to that level and then executed a short from there. I'm trying to find the tweet for you. But for those of you that are fans of the channel, you guys know exactly what I'm talking about. Do you guys have any questions so far? Z, a suggestion on the live chat to deal with have a mod on the live chat to deal with these stupid questions. That way you don't have to waste your time. Well, I'm not answering the stupid ones. And by stupid, I don't want to be, I want to make a clarification. It's not, there aren't stupid questions if they're valid, but a lot of people do troll, and a lot of people do try and, I guess scam. But here, October 26th, and again, follow me on Twitter. Guys, the link is in the description. You have no excuse. Follow me on Twitter and Instagram. I post daily trade and finance content. But October 26th, it was right here. I even put a cute little Mr. Burns character, right? Waiting for that level. This is not magic. And I said, it took more than a month, but eventually the SPY got there. And this then again was on November 30th, right here. So it took a little over a month, got patient, got there, and we shorted the hell out of it, right? So trend lines matter. Technical analysis is not hodgepodge. I think here's where there is confusion, right? Is when someone says that technical analysis is valid, the person taking the other side of the argument automatically thinks that the person is saying technical analysis is 100%. Nothing in life is 100%. You're dealing with probabilities, right? But give me high probability trading any day of the week versus gambling or blindly investing. It's so funny to me seeing these people who run YouTube channels. I'm not going to name any names, but they don't know anything about trading. And so to them, they'll say stuff like, oh, it's a long-term game. Don't look at your phone every day. Trading is useless, or technical analysis is useless. It's just because they don't know how to do it. They're just either too lazy or too brainless to know how to do it. But technical analysis is a real thing. I remember I was on a podcast with Ryan Pineda in April or March. If you go back and look at his YouTube channel or look at it on Instagram. And I was telling him, that, because he's really big into real estate. And I was telling him, how do you know whether a house is worth what it's listed for? And he said, you look at comps, right? Comps, comparables. You look at other houses in the neighborhood that sold recently. For those of you in the real estate market, you know that, right? So if you take a look at technical analysis, this is really just an agreement between buyers and sellers agreeing on what the price of the stock should be. So you basically have a whole graph of comps. Now, the reason that home prices don't move as erratically as stocks is because there's way more liquidity in stocks. You're dealing with hundreds of millions of shares a day, right? So it's a much more liquid market than the real estate market. But yeah, for those that say, that look at a chart and say that, hey, this is nonsense, they just don't know what they're talking about. And they would much rather just blindly tell their audience, hey, buy this stock and just hold it long term. And when their audience says, but the stock is down 80%, they're like, yeah, well, this is what it means to be long term. No, it doesn't. GC says, I'll name them. Go ahead. I wish you would name names, Danny Casillas. People love the drama. Jim Cramer. No, I'm not. Cramer is already a certified dummy. I'm not talking about Cramer. I'm talking about people on YouTube. Larry Holmes. Who the fuck is Larry Holmes? You're talking about the boxer? I don't know who Larry Holmes is. Meet Kevin, Jeremy, whatever, Graham Stephan. Graham Stephan, you know what I respect about Graham Stephan? If he doesn't know something, he'll say it. And I do think that he might, I haven't watched a lot of him, but a few things that I've seen on his trading and investing, he is definitely a long-term investor, and he says don't try and time the market. But I don't think if you showed him, if you showed him technical analysis and you showed him proof of some of the, how price action plays out on the chart, I don't think he would just blindly say, no, it doesn't work. Tesla just made me rich. Good job. Do you watch Maverick of Wall Street? No, I really don't watch anybody. Zed Monopoly, I don't know who that is. Roy Jones Jr. Can you take a look at shorting the dollar at this level? I think you're a little bit late on that, Manny. The dollar's down 11% since September. I think you're a little bit late. All right. Ant Williams beats. He meant Larry Jones. Yeah, Larry. I don't know who Larry Jones is either, but Larry Holmes is a boxer. He was even this is who Larry Holmes is. This would be fun if he started a YouTube channel. He would actually do better than most people. Honestly. Oh, he's still alive. Okay. Poor guy. I thought he passed away. There was what was that Tupac song? Something looking like Larry Holmes, flabby and sick. Something eat a fat. I'm not gonna say it, but for those of you that are Tupac fans, you know what I'm talking about. What do you think of Keenan Grace? Who are these people? Leroy Jenkins? My God. Henry Z, you are hilarious. Appreciate you. Do you see TQQQ getting back to normal? I wish people would not hold leverage ETFs, because people that hold leverage ETFs do not understand. Hold on, let me see. Okay. Sorry, people who hold leverage ETFs don't understand how they work, right? You have what's called volatility decay. So leverage ETFs are not meant to hold. They're meant to trade very short term. Because when the market makes huge moves down, the leverage ETF goes down disproportionately to the index. And then when the index does recover, it takes the leverage ETF more to recover at the same proportion as the index, right? TQQQ is not for holding. It's definitely not for holding. Now, people will look at this and they're like, oh, shit, this used to be 92 and it's 18. I'm just going to buy this. No. You buy the TQQQ for short-term events, right? If you're bullish. You don't buy it and hold it. What's your bicep routine? I don't know. I don't even do biceps, honestly. I do push, pull, and legs. That's how I do it. Push, pull, legs. Push, pull, legs. Push, pull, legs. And then I box. And I play ball. That's it. Tupac against all odds. Yes. Muhammad Badawi. Thanks, bro. I really learned from you today. Thank you so much. We got some ass clapping going on. Yeah. Stock Mo. God, don't even get me about that guy. Don't even get me started about that guy. I know who that is. Yeah. All right. Any other questions? Check UVIX volume spike. What is the VIX doing? Wow, the VIX is actually down 4% today? Yeah, that's crazy. Well, UVIX is down too. What are you talking about? What are you talking about? So you can throw hands. Yes, I can throw hands. You kind of hesitated on the legs part of PPL. No, I don't hesitate, bro. My legs are like gorilla's legs, bro. You can go to Instagram and you can see any of the pics I post from the gym. My legs are like gorilla legs. I don't have a problem with legs. It's Elise. You can't hoop. Yes, I can hoop. As a matter of fact. Guys, there's like, here, go to my Instagram. There's videos of me doing all this shit. Not that it's important right now. But yes, hooping, boxing. Yes. There's videos of me doing all kinds of shit. I even have a shooting machine. Snowboarding. All right. Mo was pumping Neo so hard. Yeah, I mean, no, I don't think he should be in prison. I think people that listen to him should be in prison. It's just crazy. None of these people looked at valuations, right? But yeah. Box Andrew Tate for charity. I mean, I think he was a professional fighter, right? I think he was, and if so, he would definitely beat me, for sure, because I'm not a professional fighter, and I respect everyone who does anything professionally, right? I love taking photos, Jerry, but I would never put my portfolio against yours. I've seen your photos, and I know you're a professional photographer. Bro, you have your own basketball court. No, that's not my own court. That's not my own court. That's just a court that I have access to. Are you still holding your short position on Apple? Yeah, I'm willing to hold that for a while, because Apple is my biggest holding, to be honest. So for me, it's insurance, and it expires in over a month. All right. Do you need to have level 2 or higher options to trade spreads? Yes, you do. Have you ever lost your bike in an Amsterdam canal? No. I mean, I've only rented bikes there, and I've always returned them in good shape. What is going on with VIX lately? Yeah, okay. Thank you for the on point, on topic question. Here's what's going on with the VIX. So if we overlay the VIX against, let's just say, the NASDAQ, right? And you overlay them, you'll see that the last time that the NASDAQ was, was at these, wait. Sorry. Let me make sure that I line them up accurately. Okay, so the last time that the NASDAQ in October was at the lows, the VIX was at 35, right? The NASDAQ hit those same lows and the VIX is at 20. So there's a divergence right now between what's going on with the stock market and what's going on with the VIX. The VIX right now is basically saying that most of that the market believes that most of the tanking related to inflation is done, right? So what is the next reason that the market is going to tank? So here's the thing. We got inflation that was in line today, right? 6.5%, month over month down 0.1%. The inflation story is no longer the story, right? Now, it doesn't mean that inflation is gone. I was just at the grocery store. I know inflation is fucking crazy. It doesn't mean that inflation is gone. It just means that the bulk of the inflation story is not the story anymore. And what the market is focusing on is recessionary fears. So the VIX right now is quiet. Even though the NASDAQ hit a low, the VIX is quiet because the inflationary story is dissipating, right? It's trending down for the 6th month in a row. But the recessionary fears haven't yet been priced in. And I think that until you get earnings, remember we have earnings towards the end of the month. So if you take a look at Apple, for instance, they're reporting earnings on February 2nd. Tesla is reporting earnings on January 25th, right? Microsoft is reporting earnings and so on and so forth. You can go back and look at this. January 24th, Microsoft's reporting. So in that earnings report, it might not even be, because remember, we're dealing with Q4 2022. Those earnings might not be that bad. It won't be until, when the Fed, I think they'll raise rates on February 1st. When they raise rates on February 1st, and then the next round of earnings comes, if those earnings are starting to show recessionary fears, then I think you'll start to see the VIX pop back up. But right now, the VIX is basically showing that the inflation story is no longer the thing, right? That's why. This is Los Breezy. Hey, what's going on, bro? What's going on, bro? All right. Should I sell Tesla? You're a bit late. Big bank earnings tomorrow. Yes. People don't know what they're looking for until they've taken a hit. The audience looks at them like educators. Look at it from the user side. Yeah, I guess I can appreciate that. I don't know. For me, it's like, I know that that level of naivete is varied across the masses, right? But for me, I can look at some of these people and really tell that they don't pass the smell test, right? For me, it's just the bullshit meter goes off. But yeah, I guess I can see what you're saying. All right. Big Bang earnings. Should I sell Tesla? Biden about to talk. Oh, sure. Let's take a look at all that funness. Okay, let me try and pull this up. Where are they talking? Does anyone have a link? I'm gonna go to the YouTube's. I'm gonna go to the White House's YouTube. Let's see. And while I'm doing that, guys, go to this link here if you want to sign up for the free webinar that's going to take place. I know it says December 17th, but it's going to take place on December 28th at 12 p.m. Eastern. That's a Saturday. Okay. Let's see what Biden has to say. Ooh. We're going to be tracking this. Fun times. And then I think Bullard talks at 11. So let's see what's up. Do you watch Clear Value Tax? No. Can you make a video about Alibaba? Definitely no. You think Microsoft at 195? Yes, I already answered you, Trouble Man. Yes. Where will real estate go next month? It's trending down. I think it's going to trend down. It's going to continue trending down. I actually saw something really good on real estate. Let me see if I can pull it up while we wait for the White House to talk. And the White House is talking about inflation, by the way. This is what I saw about real estate. So it shows, this is crazy because I didn't know this. And, you know, this is why Twitter is amazing. But this is by a user called Mac10, not the rapper. Pending home sales are at the lowest that it's been. On this chart, it goes back to 2013, but even lower than the COVID crash. And he shows that home builders tank during the first quarter of every year, going back 4 years now. So, you know, I do think that the real estate market is trending down. Do I think there'll be an epic crash like 2008? No, because that to me was not to me. That was a credit risk situation where there were just millions and millions of mortgages that were subprime, but they were packaged as grade A plus credit. And then, moreover, not only were people taking out those mortgages, but those mortgages were packaged and sold as securities. So, no. See? The market just taking liquidity. Oh, I might get in on this trade, actually. I might get in on this trade. If we break market structure here, I'll definitely get in on a trade. If we can break market structure here, I will get in on a long trade on futures. Let's see. Costco never gets cheap. Yeah, I mean Costco's a beast. So is, what is that other stock I was looking at? United Health. Yeah, I'm not going to enter a trade until market structure is broken. I don't randomly enter trades like that. So when market structure breaks, then I would look for a retracement. Right? I'm not on Sade says look at the FEG. It's not the FEG. You want the market structure to break, otherwise you're just entering randomly. Right? Like you want to see an impulsive move. You want to see an impulsive move above this, right? You want to see an impulsive move above and then a retracement, and then you go long. And the cool thing about that setup is it's very low risk because you can set your stop limit very close to where you entered. Yeah, I don't know where Biden is. What's equivalent to the long on future? I don't know what you mean. What's equivalent to the long on future? I don't know what you mean. It's not random entering puts at the top of the cycle. What is the cycle to you? And what puts are you buying? I mean, it might not be random as in just closing your eyes and buying stuff, but it could be more random than playing the pullbacks for sure. People seem to forget the rate hikes are now just being felt in the real economy. That's the problem. Unfiltered report is that they're not. Unemployment is trending down, right? Like we are seeing some layoffs, but not to the point, we're definitely not seeing 5% interest rates being reflected in the economy yet. That's a scary thing. Do you do day trading mainly options or buying and selling stocks? Mainly futures. And options. But day trading mainly futures, swing trading options. The trend is down, the cycle is up, so I'd enter at the tip of the bounce. I mean, if you're talking about this, yeah. Sure, buying puts here is fine. Netflix has been a day trader's dream, really? I mean, I've swung trade Netflix before. It's just been going up for like 2 weeks. Why futures over options? Because futures, a lot of reasons. Futures are fair value pricing, right? Face value pricing. The price that you see is the price that you get, but they're also leveraged, right? Futures also are tax advantage. 60% is treated like long-term capital gains. Only 40% is short-term capital gains. Futures trade 23 hours a day, 6 days a week. And they're not subject to things such as implied volatility, theta decay, etc. So holding futures, you're not penalized in the same way as you're holding options, because when you're holding options lose value every single day. And unless it makes a move in the direction that you want, yeah. GC, I have no idea what you're trying to argue, man. I have no idea what you're trying to argue. A break in structure would be a reversal. Dude, you're talking about different time frames, right? If you're saying that you're gonna that someone's going to come here and buy puts here, and this is the daily chart, fine. But if you're looking at an intraday time frame and you're looking for a break of market structure, you could, I mean, within the day, obviously you have liquidity being grabbed all day, right? Up, down, up, down, up, down. You have liquidity being grabbed all day. So it really depends on what you're playing, right? Like if I enter a long here, I'm not entering a long for multi-days. I'm aware of this daily chart here. I'm aware of this level. Oh, my bad, GC. Apologies. I'm not arguing. I'm just answering someone's question. My bad, GC. Apologies. Wow, they really have not started. It says started streaming 17 minutes ago. And yet, nothing. The NASDAQ is literally at 0%. It's flat. Do futures also have options? Yes, futures do have options. But in my view, you don't want to trade options on futures. You either want to trade options on the indices or futures. What are the little red and green arrows on your candles? Those are called fractals. Not really helpful for short-term trends. Pretty helpful for long-term trends. Or I would say medium-term trends, but not a big deal, honestly. I just have them up. I really don't use them. What's the interest rate right now? The interest rate stands at 4.25 to 4.50. I don't know if that's what you meant to ask. I think you meant to ask about the CPI. TGM. Did you hire an editor? Is that Tobias? Tobias, I hit you up, man. Check your email. I hit you up. I think that's Tobias, if my memory serves correct. I did get a lot of applications, but if I remember TGM, I think that might be you. I hit you up, man. I like your stuff. CEO hat. This hat? Gunmetal. These hats are awesome, man. I got to send you one. I'm going to hit you up on the Discord. I think I have your address. I still have your address. But I'm going to send you one, man. These new hats are freaking awesome. They're my favorite iteration of this hat so far. I've been wearing it like crazy. Guys, hit the thumbs up. If you're on the stream, do me a favor and just hit that thumbs up while we wait for Senor Biden to start talking. When you say not to hold leverage ETFs long term, does it mean you sell at a loss when you don't make some profit? Dude, if you're asking, Soner, then you shouldn't be trading this stuff. Like asking if you should trade something or if you should sell something, you obviously then shouldn't be trading this stuff. Like until you learn. Asking arbitrarily whether you should sell something, I don't know. I don't know what you have. I don't know what's in your portfolio. I don't know how much of your portfolio represents. I don't know what you were betting for or against. Just arbitrarily asking if you should sell. I don't know. It depends on what it is, bro. Like, not everything's created equal. I really, really suggest that you read this article here on Investopedia. Why 3x ETFs are riskier than you might think. Okay, it's just simple math. Okay. Assume an investor has placed $100 in a triple leverage fund. Consider what happens when the price of the benchmark index goes up 5% one day and down 5% the other. The 3x leverage fund goes up 15% and down 15% on consecutive days. After the first day of trading, the initial investment is now worth $115. The next day after trading closes, the initial investment is now worth $97.75. That represents a total loss of 2.25% on an investment that would normally track the benchmark. Does that make sense? So this is the reason here. Let me see if I can. Okay. So this is why people don't understand this about TQQQ. You know, while we wait for Mr. Biden to come on. Oh, shit. Could I have long there? No. It didn't pull back after this break. So I would not have caught that long, in all honesty. All right. So if you have $100, right, and you put it in a 3x leverage ETF, let's just say you put it in TQQQ, right? So $100 in TQQQ, okay? Let's say that QQQ, which is 3x, let's say QQQ goes up 5% one day. That means that TQQQ goes up 15%, right? Now, this is worth what? 115, right? Now, let's say QQQ goes down by 5% the next day. TQQQ goes down 15%, right? So based on this, it's going to be 15% down from 115 is 97.75, right? That's if you put $100 in. If you put $100 in QQQ, you're basically flat, right? If you put $100 in TQQQ, you are down on your initial $100. So it is not tracking the benchmark. And this right here is called volatility decay, right? So this is why I tell people, be careful when you invest in triple leverage ETFs. Yes, if you hold it long enough, you could make a shit ton of money if the index starts going up. We're in a bull market. But when there's a lot of volatility, you're subject to volatility decay. Okay? How can you tell TQQQ is 3x leveraged? How can I tell triple Q is 3x leveraged? How are we supposed to advance to using ChatGPT if people cannot use Google? Okay. TQQQ ETF. Let's take a look at what it says. ProShares Ultra Pro QQQ seeks daily investment results before fees and expenses that correspond to 3 times the daily performance of the NASDAQ 100 index, i.e. 3x, i.e. triple leveraged. There you go. Thank you so much. Yeah, no problem, Sonar. Hopefully that answers your question. All right. Hi, CJ McCollum, the NBA player. He's in this chat. Forget the speech. Is the MSB top level 4003? Did you see the latest drama with YouTube demonetizing channels due to profanity? This platform becomes worse every day. I love how people think that YouTube is supposed to be a free speech platform. Dude, rocket launcher. YouTube is the new TV, right? When you were growing up and you're watching TV, they wouldn't even let you say the word ass or shit. Yeah, I think even now, if you're watching late night TV, like you can't say the F word, you can't. Europeans find this hilarious, by the way. Like if you go to Europe and it's late night TV is like whatever goes because they're mature enough to handle it, right? In the US, we've always been like this. I love how people they think that YouTube, who makes money off of advertisers, is supposed to be, somehow the beacon of free speech. It's an ad-based platform, just like TV was, right? You're not going to get advertisers advertising kids' toys and shit if people are swearing up and down all day. So yeah, while I don't like it, right? You have to understand that it's a business. This is not a state-run enterprise where we're worried about free speech. This is a private corporation that has advertisers Just like when you and I were growing up watching cartoons on TV, they could not cuss. YouTube is just a new TV. This is nothing new. It's really American society that's hilarious. That can't take swearing on TV. Like, it's crazy. You could watch like CSI or whatever, something like that. Whatever's on TV now, like any cop show on TV. And they could be talking about murder and, you know, murder suspects like doing whatever to their victims, but you can't say the F word, right? Or you can't show nudity. But in Europe, if you go late night TV, of course you could show nudity because they're a little bit more mature. 6.5 is a joke, more like 100%. Yeah, okay. Yeah, it's funny how there's a lot of cursing in European TV. Yeah, for sure there is. There's a lot of nudity too. I remember when I remember being in Germany, and there was like basically it was like porn on TV. It was crazy. Wow, it's crazy. I hope Biden's okay. It's been half an hour and he hasn't shown up. Thought of coming in OnlyFans? I'm sure you will shine there too. No, I don't need to be on OnlyFans. All right. Let's see. He had to reboot. What if the Black Swan event is the Fed actually achieving a soft landing? Yeah, maybe. I think there's a name for that. Unfiltered report. It's called a Bluebird, I guess. Bluebird event. Yeah. All right. Let's see what if we can find a good trade setup. I'm getting hungry. All right. I really want to see this level broken, if I'm being honest. I want to see this level being broken. Or a retest of liquidity up here. This would be, I would entertain longing this and setting a stop limit right here. I may actually do that right now. Let me see. I may entertain longing this. We did hit 50% retracement of this gap. And I would set a stop limit right there. 3989. This is not a great long. It's not an A+ setup. You really want to wait for market structure to be broken before doing that. But the way that the market is pumping now, I would not mind longing at around 3989, setting a stop limit, maybe around 3982, and riding it to hopefully grab more liquidity at about 4,000. But let's see. This is on the S&P 500 futures, for those who are asking. Let's see if there's a better setup on NASDAQ, and I'll come back to the S&P. It's the same setup. It's the same exact setup. So on the NASDAQ, it would be longing around 11.45. Stop limit around 11.410. But the NASDAQ futures are a lot quicker than the S&P futures. But let's see what this setup yields. Plus, you do have an inverse head and shoulders playing out here. But a move from here 3989 to here 4004. You're talking about a 15-point move, which would represent 750 per contract, I think. Yeah, 750 per contract. But it's not an A+ setup, right? Because you really want to wait for market structure to be broken before taking something like this. Is Biden talking? What if he comes out right as the price hits the bottom of this? All right, got all my cash ready for a big crash. What MAs are you using for futures? I don't use moving averages. Did you keep that strangle still open? Yeah, I haven't even looked at it, honestly. It's probably down 70%. Wasn't structure broken just below this? No. What time did you get up? 5. What's your favorite breakfast? I don't eat breakfast. Cat just pull. I don't know what that means. Biden taking a dump, probably. Does the market look like it's still on track to bottom out in January? I don't know who told you that. QQQ, IWM, and SPY look exactly the same. Yeah, that's algorithmic trading for sure. Does being a YouTuber pay well? No. No, not at my level. If you got millions and millions of views, it could, but depends on the sector that you're in. See, this is a nice fucking long from here to here. That would have been a nice scalp. Do you fast? Not like I don't have a strict fasting regimen, but yeah, I guess I only drink coffee and water in the morning. Are you Puerto Rican? No. Everyone guesses that though. Well, I get all kinds of shit actually. What's the best buy point for Eli Lilly? I don't know. I haven't taken a look at that stock. There is not a single best buy point. When you start thinking like that, that's how you lose out on whatever it is you wanted to invest. This is what you want to invest in? No. I wouldn't invest here. I'm sorry. This is I can't invest in something that looks like this. What was the S&P 500 healthcare sector? I can't remember what it was. Sorry. Is it XLU? No. Fuck, what was the XLV? Yeah, I invested in XLV. I invested in XLE. Those were two of my last big investments, and I invested in XLU in utilities. So I invested in utilities, healthcare, and energy. But yes, going into Eli Lilly as a single stock, it's just too high for me. Yeah. Thanks Z for going over leverage ETFs. Yeah, no problem. Stank ass ho, where's my power cord? I don't know what that means. What about SOXL? What about it? Guys, ask a more poignant question. What about it? Do you think the market is oversold? I mean, that's a very generic term. Yeah, I mean, it is oversold and overbought at various times. Yeah. What is your theory about why historically the market dumps after Fed pivots? Because Fed pivots happen when shit hits the fan. This is what people don't understand. Fed pivots usually happen when shit hits the fan. It does not happen when things are good. Fed pivots after the economy crashes. And this is why, the market usually, believes the Fed. They don't fight the Fed. Wow, they're still not here. This is crazy. Do we have more watchers than them? We should. I don't know how you guys aren't. We definitely have more thumbs up than them. Do you think the market bottom is still to come? Please. Will 2024 be lower than 2023? No. I think 2024 will be higher than 2023. The market will bottom when the Fed pivots. My guess, Venezolano. You think I'm Venezuelan, Fresco Bar? Your thoughts on Meta. Thoughts and prayers. Guys, ask a more specific question. What do you mean thoughts? Ask a more specific question. No thoughts questions, please. Be more specific. Yeah, you know what? Those be more specific shirts should I should re-release them. Be more specific. Shout out to Z putting up so much ignorance on this show. Oh man. Can you show how to draw Fibonacci? Yes. I can show you how to see. Don't doubt me. What did I tell you? Long this motherfucker. Take profits above 4,000. There you go. You're welcome. Hopefully you took this trade. This would constitute about $750 per contract. Called it out to y'all on live. There you go. Hopefully some of you took a part of it. Now, you were asking me about what is an equivalent trade for this? I mean, look, if you were gonna buy the SPY to try and trade ES futures, you'd have to buy a shitload to make up the amount of money that you can make with futures. You could buy at the money calls that expire 0 DTE, but remember that options. Here's the crazy thing about the difference between futures and options, right? Like if futures don't move, you don't lose any money. So if the future say was at a price of 4,000 and it didn't move for 5 minutes and it just stayed at 4,000, you make or lose $0. If you bought an option and the price just stood still, see, hopefully some of you guys took this trade. Remember, I said long at 39.89, take profits at 4,002, 4,001, 4,002. There you go. A nice $750 day. If you're trading options and say the price stays stuck for 5 minutes, you're going to lose money, because an options price is derived partially by the supply and demand for that contract, or mostly by the supply and demand for that contract. So if there's no demand for that contract and the price stays stuck, your option is going to lose money. So as long as you know that, and the fact that you have to be right in a very short amount of time, you can trade options. But are you Persian? No, I'm not Persian. Z is a racial chameleon. He's everything and nothing at the same time. See? That's right. Rocket launcher. Correct. He's from Cuba. That's a strong second guess. That's so funny. Would you buy Tesla at 120? Would you buy Tesla at 120? Don't worry about what I would do. Why would you or why wouldn't you buy Tesla at 120? All right. Bro, Hamza, thanks. Made 4K off that trade. Appreciate you. I'm glad somebody did. I'm glad somebody made money. I'm hoping for Tesla to hit under 115 to buy it. Why? Why? Royal chicken nugget. Why? If you think Tesla's a good buy at 115, why the hell isn't it a good buy at 119? This just doesn't make sense to me, right? Like if you're looking at an investment and you think that, you know, if Tesla's 200 and you say, I'm only going to buy it at 100, that's a big price difference. If it's 119 and you're waiting for 115, that just doesn't make sense to me. Unless you're day trading or swing trading, but if you're just talking about an investment, that doesn't make sense. As I said before, don't be a dick for a tick. The market bottoms after the Fed pivots. Well, what happens is when the Fed pivots, the market usually sees, here's the crazy thing. When the Fed pivots, the market usually sees, oh, hold on, we're getting by.
Good morning. So I'm a little late, and I'm due at please have a seat. National Cathedral at a little after 11. But good morning. Today we've got some good news. Good news about the economy. For the 6th month in a row, inflation has come down. Measured over the last 12 months, it has fallen 6.5 to 6.5%. That's down from 7.1% the month before. It's down from 9.1% this summer. Inflation is now at its lowest level since October of 2021. When we look at just the last 3 months, we see that inflation fell to 1.8% on an annualized basis. It's down from more than 11% in the first 3 months of last year. So the data is clear. Even though inflation is high in major economies around the world, it's coming down in America month after month, giving families some real breathing room. And the big reason is falling gas prices. My administration took action to get oil onto the market and bring down prices. Now gas is down more than $1.70 from its peak. And that adds up to a typical family with 2 vehicles, to a savings of $180 a month, every single month, that stays in their pockets instead of being spent at the pump. Food inflation is slowing as well. Last month, we saw the smallest increase in food prices in almost 2 years. And much of that increase was due to the avian flu outbreak, which has driven up the egg prices around in the United States. It's not just gas and food prices, though. When we look at what economists
Avian flu, we got another virus?
Out energy and food, we see welcome news as well. Core inflation is down to the lowest level in a year. Over the past 3 months, core inflation has come down to 3% on an annualized basis. That's down from more than 6% at the beginning of 2022. The cost of goods is actually falling as prices from everything from computers to used cars are coming down as well. And inflation in the core services is moderating as well. You know, and as inflation is coming down, take-home pay for workers is going up. Workers' wages are higher now than they were 7 months ago, adjusted for inflation. Wages for lower income and middle income workers have gone up even more. It all adds up to a real break for consumers, real breathing room for families, and more proof that my economic plan is working. When I came to office almost 2 years ago, the economy was flat on its back, as you'll all remember. Millions of people had lost their jobs through no fault of their own. Millions who kept their jobs saw the hours and paychecks cut. Hundreds of thousands of small businesses permanently closed their doors. People were hurting badly. That's what we inherited. The pandemic was raging and the economy was reeling. We acted decisively to put in place a new strategy that would rescue the economy from the pandemic downturn. At the same time, we laid the foundation for a stronger, more resilient economy for decades to come. An economy that grows from the bottom up and the middle out. Now 2 years in, it's clearer than ever that my economic plan is actually working. Here's what we've learned just last week. Unemployment is the lowest it's been in 50 years. I'll say that again, the lowest unemployment rate in a half a century. My first 2 years in office were the 2 strongest years for job growth on record. We created nearly 11 million jobs, including 750,000 manufacturing jobs. And there were 2 of the strongest years ever for small business creation as well. And today, unemployment rate is near record for lows for blacks and Hispanic. Black and Hispanic workers, near record lows. And it's the lowest ever on record for people with disabilities. We're seeing American families breathing a little easier. More Americans have health insurance than they did ever in our history. Fewer families are facing foreclosures today than before the pandemic. And we still have more work to do, though. But we're clearly moving in the right direction. And there's more breathing room in store for American workers and families. Starting last week, as of January 1, a month's supply of
Guys, I'll be back 1 second. I got to let somebody in.
was for seniors on Medicare. Some were paying hundreds of dollars every month for their insulin, but not anymore. Starting last week, if Big Pharma raises prices faster than inflation, they're going to face big penalties. Starting last week, Americans can get tax credits when they install energy-efficient appliances in their homes, like heat pumps or solar panels, or when they buy electric vehicles. These were all pieces of that big law that we passed last year. Now they're kicking in, and Americans are starting to feel the benefits in their everyday lives. But that's not all. We're seeing historic investments in American manufacturing turn into new factories and new jobs from Arizona, Ohio, Georgia, New York. Companies have announced nearly $300 billion in manufacturing investments here in the United States since I became president. Instead of exporting jobs like we did for decades, we're now creating jobs and exporting product. Creating jobs and exporting product. That's the idea. Now the House has elected a new speaker. I can call him and congratulate him. I'm ready to work with him, or any Republican in Congress, to make progress for the American people. But like many Americans, I was disappointed that the very first bill the Republicans in the House of Representatives passed would help wealthy people and big corporations cheat on their taxes at the expense of ordinary middle-class taxpayers. And it would add $114 billion to the deficit. Their very first bill. House Republicans campaigned on inflation. They didn't say if elected their plan was to make inflation worse. Plus, House Republicans have introduced another bill, blocking action that would help lower gas prices and help consumers. And on top of that, House Republicans are preparing to vote on a national sales tax bill. National sales tax. That's a great idea. It would raise taxes on the middle class by taxing thousands of everyday items from groceries to gas, while cutting taxes for the wealthiest Americans. And if I'm not mistaken, what they've introduced, it also would totally eliminate the IRS. Feels good, except all going to be sales tax. Go home and tell your moms. They're going to be really excited about that. Come on. Is this how House Republicans are starting a new term? Cutting taxes for billionaires? Raising taxes for working families? Making inflation worse? Well, let me be very clear. If any of these bills make it to my desk, I will veto them. I will flat veto them. I'm ready to work with Republicans, not this kind of stuff. If they try to cut Social Security or Medicare, which Americans have been paying into
Why is he whispering like that? What do you say?
paycheck, I'll use my veto pen to stop that as well. But if Republicans want to work together on real solutions, so lower inflation, create more jobs, build an economy that works for everyone, I'm ready. Let me close with this. Today's inflation numbers are good news about our economy. We have more work to do, but we're on the right track. We're seeing bright spots across the country where great things are happening. Roads and bridges are being built. Factories are coming online. People back to work again. Families breathing a little bit easier. That's why I can honestly say, you've heard me say this before, and I mean it from the bottom of my heart, I've never been more optimistic about America's future than I am today. We just have to remember who in God's name we are. You've heard me say it many times. This is the United States of America. There's nothing beyond our capacity if we work together. So God bless you all, and may God protect our troops.
Mr. President, thank you.
Norman says, motherfucker trying to be John Wayne.
Next to your Corvette, what were you thinking?
Let me, I'm going to get a chance to speak on all this, God willing, soon. But as I said earlier this week, people, and by the way, my Corvette's in a locked garage, okay? So it's not like you're sitting out in the street.
So
But at any rate,
was in a locked garage.
yes, as well as my Corvette. But as I said earlier this week, people know I take classified documents and classified materials seriously. I also said we're cooperating fully and completely with the Justice Department's review.
What happened with the Corvette? I don't watch political news.
Other places where documents in my, from my time as vice president were stored, and they finished the review last night. They discovered a small number of documents of classified markings in storage areas and file cabinets in my home and my personal library. This was done in the case of the Biden-Pence.
Vincent says Biden is the new ASMR artist.
Was immediately, as was done, the Department of Justice was immediately notified, and the lawyers arranged for the Department of Justice to take possession of the document. So we're going to see all this unfold. I'm confident. Thank you very much. Thank you. Hey, how you doing? Good to see you.
How's the First Lady, sir? How's the First Lady?
She's doing really well. She was under a long time for 5 hours because what they were doing is would do the Mohs, meaning remove what they thought might be cancerous, and they'd have to then go back and test it and see what it was. But she's doing really well. She's up. We had breakfast this morning. She's recovering, and she's gonna be sore for a while because of the work they did on her eyes, and that's where one of these were. But she is a 0 to 1% chance of ever return of any cancer, and so thank God she's doing really well. Thank you for asking.
Well, there you have it, folks. Can someone summarize he was saying that unemployment was the lowest that it's been, blah, blah, blah. He's right about that. If you look at the unemployment metrics, it's the lowest that it's been since 1969. But I'm not sure what he was saying about, why he was whispering about vetoing, and then something about a Corvette that's locked in the garage. Yeah. All right, let's see. Let's see what the markets are doing. Really a flat day. Again, very bad for strangles and straddles. It's really a day trader's market here, honestly. Are there any trade setups that I would take right now besides the one that I highlighted where netted 750 per futures contract? No, that's the only one that I've seen so far. And it was basically, and someone had asked a question about Fibonacci. We can go over that. But whoops. All right. I'm gonna go over Fibonacci, and then I'm gonna go over the trade that I highlighted live for you guys. So with Fibonacci's, it's all about the first. Okay, so even though you will get differing opinions, I would say that the most mainstream interpretation is that you always draw Fibonacci's left to right. Okay, so whether you're measuring a trend up or a trend down, and by the way, this is stuff that we go over in our masterminds all the time, right? And you get to ask these questions in real time. And I get to answer the questions about your pain points and make sure that, you know, everybody is learning at the same pace and learning is brought up to speed for everyone. Okay. But whether you're measuring a trend down or a trend up, you're going to go left to right on the Fibonacci. Okay. And the reason that I say that is because whether you're, depending on whether you're measuring the trend up or trend down is going to determine where you start your Fibonacci. So either you're going to start it from the top to the bottom, or you're going to start it from the bottom to the top. Now, when would you do either? This is very easy. Okay. And I think that people just need to do this all day for a day until it sinks in. Or else it's not going to sink in. But when you're measuring Fibonacci's for a downtrend, okay? Or sorry, when you're measuring Fibonacci's for an uptrend, you want to start at the top and end at the bottom, okay? So if we're measuring this trend here, if we're measuring this trend and we want to see where it's going to stop, you would start again from left to right, always left to right. So you go left and we're measuring the uptrend. So you start at the top and then you end at the swing low. And that way you measure this uptrend here, right? Now, if you were trading off of Fibonacci, guess what you could have done at the golden pocket? Easy short, right? Easy short for a scalp. This stuff is not magic. It's because trading is based on algorithms. And so, you know, these tools are baked into the algorithms, right? This is why stuff moves very robotically now, since electronic and algorithmic trading has been introduced. So that's why when you're measuring an uptrend, you would start at the top and end at the bottom, and you're measuring this uptrend. And again, you could see that the price stopped at the golden pocket. You could have shorted here with a tight stop limit and made money off of that scalp. Now, I personally don't trade off Fibonacci alone. It coincides with the rest of what I'm looking at, okay? Now, when you're measuring a downtrend, say you wanted to measure, you wanted to measure this downtrend here, and you wanted to see how long it could potentially go, well, again, you start left to right, but because you're measuring the downtrend, your point starts here, and it ends at the top of your swing high. And then you're measuring this downtrend against these Fibonacci points and look at where we stopped, right? There's a reason that I only have the 0.5 and the golden pocket up on the Fibonacci. Those are really the only things that I look at. But again, if you were trading off of the Fibonacci, this would be a long scalp here, right? So that's how you draw it. Let me look at the questions. What stock are you trading? This is the S&P futures. Rohan, drinking. I don't know what that means. What platform do you use for futures? Thinkorswim. Who was speaking at 11? Bullard is speaking at 11. I don't know if it's going to be on the Fed's YouTube channel, though. Chart TZA and show direction in your opinion. RSI looks good. What do you mean show direction in your opinion? I guess I'm not sure what you mean. I mean, this is a 3x ETF. We just talked about this. You don't want to hold these. Rewind the tape if you want to know why. You could trade them, but you don't want to hold these. More live streams, please. Yes, okay. And for those of you that love the live stream format, you will love our mastermind format. We're doing a mastermind January 28th. This is the second one that we are opening up to the public. Make sure you join that. There's only going to be, I think, around 500 seats. So when we should short SPX 500? I mean, honestly, if you're asking, you shouldn't short anything at all. Shorting is very risky. If you don't know what you're doing, don't short until you get your feet wet in terms of trading these different instruments. But it depends on what time frame you're talking about. In this case, you could short here on the daily, right? Like we hit major resistance here. If you're talking about intraday, that's a whole other skill that takes hours and hours and hours and months and months and months of practice. So it depends on what you mean. You mean for the day? You mean for multiple days? How are you shorting it? That also matters. All right, let's see. What time frame usually when looking at the fib levels for day trading? I'm looking at all time frames. I'm trying to develop a bias. How do you buy futures? How do I answer this, Monroy? How do I answer this? Like, obviously, Google futures trading platforms for the geography that you're in. I mean, there's a bunch of them. I don't know. How do you buy apples? How do you buy oranges? You buy futures by going on a futures platform. I use Thinkorswim. If you're outside of the US, you will likely have to use something like Interactive Brokers. What is your preferred method to short? Richard, it depends on what I'm doing. You could short a whole number of ways. Debit spreads, buying puts, shorting the futures, shorting the stock itself, right? You could do a whole host of things. Just tuning in from Holland, you missed the CPI long trade or still room? No, you missed it. It's a scalp. It's a scalp, right? It's just, it was literally this trade here. Right? It was going from here to here. That's it. You don't stay in the long. This is literally just a day trade. You would have already exited by now, right? Thank you for never responding to my comments. Bro, like, you see how active this chat is. I don't know. Why don't you send a donation? How about that? Stop whining and send a donation. Right? Then it will pop up. And then I will find your question. Usually people do super chats, but I don't. That's how they get their questions answered. But I'm telling you, I'd rather you hit the donate button than the super chat button. Can you break that scalp trade down, please, Z? Yes. So here's essentially one of the ways in which I trade, right? Like I showed you the power of Fibonacci's just a second ago, but here's one of the ways in which I trade, okay? Intraday. I generally look for a market structure break. What is a market structure break? Here, I'm going to try to draw it out for you so it's simple, okay? A market structure break is when an uptrending market is making higher highs and higher lows, okay? Higher highs and higher lows, higher highs and higher lows. In an uptrending market, see, you have a higher high, higher low, higher high, higher low, and so on and so forth, okay? In an uptrending market, market structure is broken when this higher low is breached. This right here is called your market structure shift, okay? Then you would wait for a retracement into a certain area, and how you find that area we'll talk about in a second, before continuing down. Because the market structure shift is telling you that the bias has changed. Same thing on a downtrend, right? You're making higher lows, you're making lower highs and lower lows, okay? On a downtrend. Now, the minute that this lower high is broken, this is your market structure shift, right? And then you wait for a retracement back before coming back up. So this is an ideal scenario, okay? When you don't have a market structure shift, you can still trade off of things like the Fibonacci. You can still look for fair value gaps. And the reason that depends on my feeling about the market that day, but the reason that I don't mind these non-A+ setups is because you can set your stop limit very close to where you entered, right? Your best bet is to wait for a market structure shift. So let's just say that price went up, broke this market structure, and then came back down, then you would look for longs. But if you were scalping, you don't have to wait for A+ setups, right? Scalps meaning really day trades that are very short in both time and in dollar increments. You can still scalp as long as you are very strict about where you put your stop loss, okay? So in this case, I'm drawing what's called a fair value gap. This is a concept that I think was really, I want to say, packaged together in a tradable format by a trader called ICT, okay? Correct me if I'm wrong, but I think he was really the pioneer of packaging this stuff together, right? Like imbalances were always a thing. The concept of imbalances were always a thing, but packaging it into parameters, right? Into set parameters. I think that was something that he coined. But basically it's a 3 candlestick pattern where you have, it's usually, you could spot them pretty easily when you have these long candles, and you take, in this case, you would take the high of the previous candle and the low of the post candle, and this in the middle, which is mostly encompassed by this long body, is called a fair value gap. So usually you'd want to see a market structure break and then a retracement into this gap, and you really have a perfect trade when at least half of this gap is filled, right? And you could start scaling in your buys from half of the gap all the way until the full length of the gap. And what makes this very lucrative is you can actually have your stop limit very close to where you entered. So if I'm entering here and I'm targeting this area of liquidity here, right? Then I don't want my stop limit to be so far below where I'm targeting. So if I'm targeting a 11-point move, I'm not going to have my stop limit be lower than 11 points. I want at least a 1-to-1 trade, okay? So that is why, I highlighted that as a nice scalp. It ended up retracing down to almost fully the fair value gap, going up to 4,003, and that's where you would have taken profit, right around this area of liquidity. And it's a nice trade. It's nothing to balk at. It's like between $500 and $750 per contract on the ES futures, right? So that was that trade. It was just a scalp. Now, really what you want to wait for is if you're looking for longer, more lucrative trades, you want to scale up to, like, say, the 15-minute or the half an hour. You want to look for market structure break. And then you want to go to the smaller time frames and enter that trade for a potentially larger move, right? But if you're not waiting for an A+ setup, then really you're just scalping at that point, and you should be taking profit very quickly. You shouldn't try to play big moves off of non-optimal trades, in my opinion. VIX below 20. Yeah, as I said before, I think the inflation picture is no longer the picture that VIX traders are taking into account. The next picture is the recessionary picture. Sir, please tell about gold. What about it? I try to be part of the option group, don't know how to do it. Abram says, just go to my site. Just go to thetravelingtrader.com and go to get started. As easy as pie, and book a call. That's it. Just do that. What time frame do you use for scalps versus longer trades? I just went over it, Mo. I use all of them. 1 minute, 5 minute, 15 minute, 30 minute. It depends on what the market is giving me or not giving me. It depends on what I'm looking at. If I'm going to the 30 minute and I'm like, fuck, this looks like shit. This is barcoded. There's no market structure, visibility. I can't tell, like if you're looking at this, there's no semblance of market structure here. It's just barcoding. So then I start drilling down. I'm like, okay, maybe I can find some trades on the 5 minute. And really that trade that I highlighted, like, was really one of the only trades of the day, but you want to use the time frames to tell you the story. You don't want to shift through time frames based on what somebody told you or based on a rigid set of rules or based on randomness, right? You want to go through the time frames based on need. So if I'm going to the 30 minute and I'm trying to see about larger market structure breaks, but it looks like this, I'm like, shit, I can't trade this. 15 minute, same thing. I can't trade this. Okay, let me just start drilling down to the 1 minute and 5 minute, see if I can find trades here. So you were explaining when Biden cut, the market bottoms after Fed pivots. Okay, I did a whole Twitter post about this. Let me see. One second. While I go through it, we have a lot of data on this. Let me find it for y'all. One second. Almost there. We're in December. I wish there was an easier way. I wish Elon Musk would make it easier to search in your tweets. Especially if you tweet a lot. Diamonds in my watch. This shit costs a lot. All right. I'm not wearing a watch, by the way. Oh, there's a picture of a watch. Actually, that same very watch here. You know what's so funny about this watch is so many of you tagged me on Instagram showing me that you bought this watch. I'm like the Oprah of trading. I just posted this. I swear to God, there was about 25 people that tagged me that bought the same watch. All right. So here we go. Here's a few things on the Fed pivot. Janine. My God, where are we? Wow, was it really that long ago that I posted this? I know, this is very suspenseful. Hold on. I promise you it's worth it. 1 second. Oh, wait. Okay, right here. Here's a few things, okay? The stock market is not going to wait for you to check if the coast is totally clear before rallying. It will always rally before the coast is clear. The market is forward-looking. It always bottoms out before GDP, payrolls, and earnings. So I had posted this showing that in a recession, right? These are only recessions. When unemployment starts getting bad, when payrolls start getting bad and they start dropping, where, unemployment rate we're still pretty high, but payrolls look like they're starting to peak, okay? Earnings haven't dropped yet. So if we hit a recession, the market always starts rallying before those things bottom out, always. So that's one thing, okay? Is that once we're in a recession and this stuff starts to drop, mainly GDP, which it looks like Q4 GDP is going to be 3.9%, which is crazy. So we're not anywhere near there. Earnings, which earnings still haven't yet shown any real serious compression, and payrolls, which are starting to peak but haven't dropped yet. The market will always rally before that, okay? So that's one. Two, if you look at, my God, was it really that long ago? When the Fed pivots, okay, right here. If you look at when the Fed pivots, the red is the S&P 500, right? So if you look at when the Fed pivots, you do tend to see another drop. But, and here's the big but, sometimes the market will actually bottom before the Fed pivot, right? So the market, in the dot-com crash, the market did bottom before the Fed pivot, but then the economy got really bad, and that recession was pretty hefty. That after the Fed pivot, the market tanked to really beat the lows that we saw before the pivot, okay? Here we go. In 2008, the Fed pivots, and then the market tanked and found a bottom. Same thing with the COVID crash, okay? But back in, I guess the crash of 87 was very quick, but we did have the savings and loan crisis of the late 80s that did put us in a recession. So, could you wait until the Fed pivots? Yeah, I think you can. I do think the market will bottom out. It really depends on how vile or how deep you think the recession will be. These two recessions were the worst recessions since the Great Depression, right? So are we going to see another recession where, stocks are going to be down 60%? I don't think anybody can tell you that. But yeah, I think you do. This is why I said that it's so much easier to trade the 2-year treasury when the Fed pivots rather than the stock market. For me, I'm going to be buying stocks when I think, when I think individual stocks are at valuations that I care about for the long term. But when the Fed pivots, this blue is the 2-year treasury. This for sure drops every single time. Every single time the Fed pivots, you get a huge drop in the 2-year treasury. This is very easy to trade, in my view, right? Here's the other one. Fed pivot, 2-year treasury tanks. So, the 2-year treasury futures is the ticker symbol ZT. But, essentially you're going to get, when the Fed pivots, you're going to see a drop in the 2-year futures, right? And that's when I'm going to be short these 2-year futures. Sorry. The 2-year yield drops, meaning that the futures rally, right? Because remember, there's an inverse relationship between between yields and between bond prices, right? So these bond prices are going to rally when the Fed pivots. So I'm going to be long the 2-year futures, essentially short the yield. Al, appreciate it. Thank you so much for that donation to St. Jude's for $20 donation. Thank you so much, Al. Just played back the ICT breakdown, and you gave a course in just 3 minutes. Appreciate you, Al. This is what we do all the time, and we do this in the masterminds as well. If you're just interested in joining, just click the Get Started button. Go to thetravelingtrader.com, click this little button here, and book a call. Otherwise, join the free mastermind. James Z, thank you very much for that. Made perfect sense. Yeah, appreciate you. D-striped 8. Fed pivot means market drop because the Fed broke something. Yeah, but the lows are a year or so after the Fed pivots, but 2024 will be higher than 2023. I mean, Janine, you're asking me to like be the end all be all predictor. I don't know. Do I think if I had to bet? Yes, I would bet that 2024 is going to be higher than 2023. I think we're going to see, most of what the Fed is going to do this year. And the Fed might even pivot towards the end of this year, right? Not all recessions are created equal. Some are very long standing and stubborn, and some are very tiny and short, right? By most metrics, with the economy growing the way it has, right? You have the economy growing. You have unemployment basically going down, right? And you have inflation going down. It's definitely something that we've never seen before. We've never seen this before. So I don't think anybody can give you a prediction. You're trying to guess the bottom of the market. Like, who cares, right? Like nobody puts this level of scrutiny when they're buying stocks in a bull market, right? Like nobody scrutinizes the S&P 500 when they're like, yeah, I'm going to buy Tesla at 400 and buy the S&P 500 at 450. Woo! And everyone's like throwing money in the stock market, right? But everyone wants to nitpick every little piece of data and, penny pinch their way when the market is in a much, much more lucrative opportunity than it was here, right? So apply more scrutiny here than you would here. Just saying. You'll be a much richer investor long term if you do that. Anyone remember the Pivot Friends episode? No, I don't remember that. All right. Cool. We've been on for how long have we been on? 2 hours? Oh my God, 3 hours. Okay. I got to jump off and trade. Especially because the market is being pretty flat right now, and I don't think it's going to remain flat for the remainder of the day. So I want to trade this volatility. I'm going to jump off. I'm going to see you guys. For those of you that are in the Academy, I will see you on the Discord. Remember, for those of you that want to join the webinar on January 28th and are not part of the Academy, I'm going to leave the link one more time here. I know that it says December 17th. Ignore that. It's January 28th. But yeah, and I will see the rest of you guys in the Discord, in the Academy. I appreciate each and every one of you. I love each and every one of you. Thank you guys so much for the donations to St. Jude's. Appreciate you guys, and I will see you on the next one. Let me know in the comment section below if you want me to do more live streams, and I will do it more than just on the